All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Jawfiel, what's up, man? Thank you for being here, and absolutely, I'm glad to be here streaming with you guys. Lost X, welcome in. Glasshopper, thank you for that. Smash the like button, guys, on your way in. R Pink, welcome in. I'm glad you made it in time. Jerry16, welcome in. When you make a Discord, I'm interested. Awesome, Jerry16. I will let everyone know when I plan on making a Discord. I will let everyone know on that, and stay tuned. Quiles 1100, welcome in. THR Tiger, what's up, man? Good to see you in here. Crypto OG Avica 100,000. All right, well, we could see. Let me get back to Bitcoin. I was looking at the total market cap here. Yeah, it's possible. I'm looking at potentially taking out our local highs. Or we just took out the local highs from yesterday, but I'm looking at taking out the future highs. But I did just enter a scalp short, like I posted in the Telegram. TRX 0101, welcome in. Glad to have you back. Thank you for being here. Newbie Crypto, welcome in, man. What's up, Daddy? Thank you for smashing the like button, man. Warthog Thunderbolt, ready to crush it with you as well, man. Welcome in, Dad87. Welcome in. I had an alert at the same level with you. Took it from my phone. Awesome, man. Also in dripping on that level. Naked Nate, I think you meant Naked Daily POC on that level. Yeah. Dr. Goat, what's up, man? Welcome in. And Samuel S44, hello to you, and thank you for being here. Thank you for modding. Also, R Pink, thank you for modding. So, guys, yesterday, well, I was looking at potentially coming up and taking those local highs out. You can see at $92,400 because we had front run our golden pocket. This move down here. Now, here's the thing. We're getting a bit high for being a wave two. If we were looking at a contracting diagonal to the downside, okay, let me get that golden pocket on. If we were looking at this structure here being a contracting diagonal to the downside, and then we were as an impulsive move to the downside, your wave two often retraces between the 0.5 and the 786, with the golden pocket being like the best level, the most rejected from level. And we're pushing up, but the way we're pushing up here with increased volume, and at least from the lows of yesterday, this looks like a 5-wave impulse to the upside locally today. I am short. I just entered a hex short because I'm also in a scalp long from down here, and I talked to you guys about that trade yesterday. Entered a short off the swing failure pattern into our naked daily point of control. It was the swing failure of these highs right in here. And I will play the range. And so we're just playing our larger range, right? So we're shorting near the highs of the range, longing near the lows of the range. And there still is a chance that this could be a 1, a 2 coming all the way up to the 786. And then we're going to see that bigger 3, 4, 5 coming down and potentially coming to 87,500 or even to the value area low of the range. But we are breaking out of the value area high of the range today. You can see on Coinbase, that value area high is about 91,570, even if it's pulled to current price action. Now on Bybit, our volume profile is shifted. You can see our value area high is all the way up at 93,000, almost $93,100. And we're working on flipping it to support as we speak. But if we just pull this volume profile back a little bit and look at the volume profile from yesterday, like without today's pump, you can see that that value area low was down right at that pitchfork resistance, the pitchfork band of resistance. And we were rejecting that pitchfork band of resistance and value area high multiple times. One tap here, another tap here, another tap here. We couldn't get past it. But after we rejected from it the third time, right in there, let me go ahead and zoom into the 15-minute chart. After rejecting from it a third time, right in this area, I'm actually going to, now let me zoom back into the 15-minute and we will pull this volume profile just to that area. You can see one rejection, 2 rejection, 3 rejections, and we saw a little dump, and then we moved up, rejected again from that value area high. But we'd once again front run the golden pocket. If we look at this move, and this is, like I said, the last couple days, guys, I'm looking at scalp trades, scalp long, scalp short opportunities, because we're stuck in a range. And with this range, you can make good money off of small moves in the market, depending on your risk reward, depending on your entry. So we had front run on this low, we had front run the golden pocket. And I said, and then we were moving up and coming down again for another low. And what I was looking at was seeing a swing failure pattern of that low into the golden pocket. And we did hit that golden pocket, hit the swing failure pattern of that low into the golden pocket. Upon reclaiming that level, I did enter long, and that's what this long is right here. Entered long and I entered a little bit above the level, of course. And TP1, I said in the Telegram yesterday, was just taking out those semi-equal highs right up into here, into our larger golden pocket. And this was our golden pocket retrace from our last few days of a move down. Well, we did I took profit upon taking these highs, so right in here. But we busted through the golden pocket. We're coming up to the 786, the naked daily point of control, the swing failure pattern. I have taken a TP2 now officially, so I'm like 80% out of that trade, 85% out of that long trade, that scalp long trade. But you can see on this scalp long trade, even if I just took it to our prior highs, it was a 9-to-1 risk reward ratio. So a lot of people are looking to get huge, catch the absolute bottom of a move and write it up, and they're, entering multiple times, entering without confirmation, get stopped out 3 or 4 times, and then they'll finally catch the move, but they're they'll catch it maybe on this higher low, enter here, stop below the low. And if we look at that, let's just say we entered here, stop is below the low, and we're targeting these highs up here. You can see that your risk to reward, okay, wait, let me fix that, is only a 5.38. So this is a much larger move to the upside. This move is a much larger move to the upside than this small move here. But I made more money on this scalp trade here because my risk to reward ratio was better. So therefore my position size could be better because I got a better entry, a better, tighter stop loss. And you can actually make more money on smaller moves. So lately I've been looking at scalp trades within this range until we see a little bit of a resolution of this range. Also, I just entered here and I got a pretty good position. I got about $93,700. So right up in here, 93.7. Stop is now above the local high. And I'm actually just targeting the VWAP as my first TP. It's a 4.6-to-1 risk reward trade. Looking at just playing scalp positions while we have this kind of wonky price action that we're seeing. Actually, let me get rid of that. Overall, on Bitcoin, we were looking at, from the 84.4K lows, we had invalidated a 5-wave impulse because we'd hit this golden pocket down here of the wave 3, pulled from the lows of wave 3 to the highs of wave 3. We hit the golden pocket. So now, because of that, and we also broke market structure bearishly, because we broke market structure bearishly, we're looking potentially for a lower high to come in on the charts before then putting in a lower low, and potentially even breaking down and sweeping all of this liquidity that is built up in here. So that is why I am hedging short right now, a scalp short with the probability that we could break down here, and then I would just compound and add to the short once we lost our value area high again. But our value area highs are different. Let me clean up this chart now. Let me get rid of some of this stuff. TP1, we'll get rid of the swing failure pattern. We'll get rid of this. So this is kind of our last bastion of resistance before taking out these highs. If we break above this resistance here that we're at right now, I do think not only will we take out the highs at 94.8, but it's likely that we do come up to about 96, 97K, 96.5 to 97K. And we know that 96.5K zone is where our large point of control is on Coinbase. Let's zoom out to the daily. I'll show you guys. Let me go ahead and turn off these naked dailies. And if we turn on our large volume profile, you can see here that large point of control, 99.5, 99.6, or 96.6, 96.5, coming up just above us. And because we did hold the value area low of that macro range, testing it many times, holding it as support, holding it as support, holding it as support, there is the potential that even in a corrective move, we could come all the way up to this area, hit that POC, which is considered fair value for the past year for Bitcoin. It's the absolute fair value over the past year for Bitcoin, where then we could see still a sell-off to come down and make new lows. That's more macro time frame analysis. But right now, we are focused on this corrective range that we've been in for 8 or 9 weeks, and we're just playing this price action. You can see here, we are seeing some bullish triggers today happen because we are breaking above the value area high with volume. We are breaking out of the value area high with volume after taking liquidity of the range high and falling back inside the volume profile, which was a bearish sign. We wanted to see continuation down to that POC. We didn't. We were able to hold local support in here, and now we're breaking out again. So because we're breaking out of the value area high again after holding local support, it's likely that we do come take these highs. And if we don't reject from where we're at, let me just say that this is our if for the bears, they need to reject us now. If the bears don't reject us now, we are most likely going to continue up to 96, 97K. We do have a naked weekly point of control at 97K, at least on the Coinbase chart, 97K, 96K. So 96 to 97K is kind of where I'm looking, but really from 96.6 to 96K is that key area. And I do want to talk about this naked weekly point of control because depending on which exchange you are using, the naked weekly point of control is not there. So I'm going to go into, let's just go into the 4-hour time frame here. On the 4-hour time frame, if I turn on that naked weekly point of control, you will see on the Coinbase chart, of course it's not, let me go into the 1 hour where I usually mark stuff out. You can see we have that fresh naked weekly point of control from that area at 95,971. Now, if we go on to the Bybit chart, Bybit USD chart, which is the second chart that I follow, it has been tapped. There is no naked weekly point of control up there, but there is the anchored VWAP, which is a little bit different from Coinbase. This is our anchored VWAP from 49K. Those 49K lows, very, very key anchored VWAP. Once you lose that anchored VWAP, you'll often come back up and back test it. And if you reject from that area, you can expect more downside. Just like when we lost the 107K anchored VWAP, we back tested it, we rejected. Now on Coinbase's chart, obviously that back test and rejection was a whole lot better. It was holding a support, back tested, rejected, lost it. So now we're looking for something similar on the Bybit chart. All right, let me check the chat here, see what you guys are up to. Welcome in, everybody. Thank you so much for being here. Bubba Trading, welcome in. Glad to see you here as well. Thank you for hitting the like button. KS, let's see, KS hit J Jupta. Thank you for being here. Power NV, welcome in. Good afternoon to you as well. AXSCB, good to see you in here, man. Do we have bearish divergences? How is open interest looking? Okay, this is another thing. Great question. And Jesus Save 77, God bless you, man. Thank you so much for being here. Appreciate you so much. Thank you for that super chat. Really happy to see you here. On the open interest and the CVD, this is pretty much from our breakout yesterday. So yesterday we were looking at that internal swing failure pattern. And this is where I longed. And from this area, we have been pushing up pretty much in bullish market structure ever since. Well, you can see, yes, we did at first. It was a short squeeze, right? CVD was dropping, shorts coming in. Actually, it wasn't a short squeeze because a short squeeze, you'd want to see that CVD going up for a short squeeze. A forced closeout of shorts is a market buy. But we did see pretty much just a lot of positions closing out. Your open interest was heavily dropping here. A lot of positions closing out within this chunky, flat, sideways, wonky action that we got. But from the lows, pretty much the swing failure pattern lows, not the swing failure pattern. I'm sorry, this guy here. This was the one I was looking at yesterday, not this guy. This is where I entered long yesterday. So from these lows, you can see that our open interest, for the most part, at first it was starting to drop and open interest was, or CVD was increasing. So it started as a short squeeze, a little bit of a short squeeze to start. And then we have been pushing up in our open interest. So open interest is increasing. That means new money is coming into the market. New positions are coming into the market right now. Well, a majority of those new positions, at least at the beginning, were short positions. You can see here, new money coming into the market. Those were short positions. And then what happened from it? Short squeeze happened. we started getting a bit of a short squeeze because those shorts were trapped underwater, giving us fuel to push us up a little bit higher. We pushed up, we took out the local highs, saw a little bit of a correction, and then on the back test of the VWAP, what happened? New longs started stepping in. Your opening or your CVD was increasing, especially at the beginning. CVD's increasing in here. New longs have stepped in. So a pretty healthy move up so far today. Pretty nice, healthy move up. And actually, I want to look at this. Is Bitcoin about to take out those local highs? Wow. Yeah, I mean, guys, we did have some 12-minute bear divs on the chart, and that's the reason I shorted is because we did get the confirmed swing failure pattern into that naked daily point of control. It's also right around where your 786 is. And you can see here we have higher highs on the price action, lower highs on the momentum waves, confirmed bear divs on the chart. Money flow is kind of draining out of the asset now as we're coming up to this key resistance. But we're not really breaking market structure bearishly. We still have now some bullish CVD divergences locally on the chart throughout the day. We have lower lows in the CVD. We have higher lows in the price action. And actually, it's more from this low here from yesterday's lows. Higher lows in the price action, lower lows in the CVD, and our open interest is increasing here. Now, it's not a nice steady increase. We have this big drop in the middle, which is not preferred to see. You'd rather see it kind of climbing steadily. But overall, we are developing bullish CVD absorption, which is a much better signal than bullish CVD divergence. It's a much clearer and more reliable signal. So if we do pull back from this resistance area that we're at now, the reason why I plan to take some profit at the VWAP, because oftentimes in an intraday bullish trend, just like here, we bounce from the VWAP and we continue. So if we are going to reject, come down to that VWAP, especially with the bullish absorption that we're seeing on the chart, not only will I take 50% of my short trade out right here, but I might even look to compound that long trade that I was in that I've taken out about 85% out of now to continue up to 96, 97K. But I just want to check this out. It looks like we're really trying to break those highs again. We're pretty much at my entry right now, $93,700-ish. Sometimes you get that swing failure pattern, that pierce above, you get a little bit of a drop, and then you back test that exact level and then drop here. So I'm not exiting out. Actually, on this trade here, I'm willing to get stopped out. My stop loss was so tight, I didn't even use, I used about 0.95% instead of 1% risk on the trade. I used about 0.95%, so a little bit less than 1%. But I've already made from yesterday, over 5%, 6%. So it's okay if I lose 1% here because I've already in a winner from yesterday. So I'm willing to get stopped out. If we get stopped out, okay, great. I can look to re-enter if we do another swing failure pattern, or if we break some market structure bearishly, we can look to re-enter. But for now, I'm just going to stick in this thing. Let's see if we can get a rejection here. Time Attack, welcome in, man. It's good to see you in here. Thank you for being here. And also, thank you for modding as always. Decrypto, welcome into you as well. Time for the Divine Pump song. Yes. Okay. Hey, guys, by the way, tomorrow I am doing a collab with Jason tomorrow. It's going to be a recorded video. We decided on recording video. So I'll probably be dropping that video in the next day or two. Depends on how long it is, if I need to chop it up at all. But me and Jason are going to be doing a little bit of a collab together. I think he's going to release one on his channel. I'll release one on my channel. So stay tuned for that video. We're going to go over some of the more macro price action and what to expect. If you guys watched, Jason did make a video today on kind of what 2026 predictions and kind of what to expect for 2026. And we're largely or closely aligned for what he expects for 2026. I just little bit different, or I guess the ways we came up with what we're looking at is a little bit different. So it should be a very, very interesting collab. Hope you guys like it, and I'll let you guys know when I do drop that. I'll post in the Telegram as well. So But really happy to be collabing with Jason tomorrow. I just want to check this out, guys. I want us to start losing this 786 Fibonacci, and I really want to start to break some market structure bearishly, because even locally here, we're still making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we could keep going here, and we really need to see that rejection come in. Yeah, I mean, even in the past few minutes, we've been hour or so, we've been seeing fresh long positions step in here. Now that could be a recipe for disaster. Guys, we are seeing fresh long positions step in right at resistance, right at a naked daily point of control, right at the liquidity grab, and right at your 786. So maybe we SFP the highs one more time again and then see a drop. That would be a real shame, and I'd maybe look to re-enter. Looks like I'm about to get stopped out here, though. Let's see. Yeah, it looks like I'm going to get stopped out. Money flow looks pretty bullish here on Market Cypher B on the 1 minute. No real bear divs. Yeah, probably going to get stopped out here. Thing is, we are starting to develop those bear divs. 6 minute bear divs potentially developing here. So if we take out that high one more time, maybe come up to about 95K, 94K. I'm going to pull that 886 Fibonacci, and we'll look at that 886 Fibonacci on here. 94 200-ish, 94 190. All right. Don't think everyone is expecting that break to 90. Don't you think everyone is expecting that break to 96 to 98? Could it be that the market doesn't give that to people? Yes, absolutely. Lost X, that absolutely, that is a real possibility. And I'm even looking for a potential SFP of 94.8 into about 95K, because once again, we did break market structure bearishly. So with this, let me fix that. With this last week of a push up, a couple weeks here, this push up, we now have to classify this more as a 3-wave corrective move, because we did hit that golden pocket, which is almost a hard invalidation for a wave 4. I understand market structure is still bullish, and we pretty much flipped these prior highs into support, and we're pushing up here. But what we can expect now, everyone thinks, okay, we flipped what was support or resistance into support. Now we're going to boost right up here. What you can see in a flat corrective move is your big push down. You come all the way up, you grab the liquidity of those highs, and then you could start to come all the way back down and dump. And this could be a part of just this massive complex correction that has been continuing here. Now, if we start to close daily candles above this value area high, which is different on Bybit, on Coinbase, it's around $91,700. On Bybit, it's about $93,000. But if we close our daily candle today above the value area high of the range, then I am expecting new highs. Whether that's 95, 96, 97, we can look at local structure to determine when to look for shorts from there. But really, this is the area. This is our area we want to reject. Our 786, our naked daily point of control, and that internal liquidity grab. Right in here. Liquidity, and then you saw the big drop right after that lower high bounce. So yeah, maybe everyone's waiting until we get up to 96, 97K, and we just SFP into 95K, maybe into this midline here of this channel, and then reject. The normal Swede, welcome in, man. I just did take a scalp short from this swing failure pattern, normal Swede, but it looks like I'm going to get stopped out. Now, I'm also long from down below, right in here. I'm long from this area. So for me, this was kind of a head short position, and I've taken 2 TPs on my long trade already. So I was looking to enter short just kind of as a precaution here. or as a hedge, literally just as a hedge here. But we'll see how this plays out. Yeah, we're breaking those highs, guys. Or about to. All right, let me get rid of this. I did give myself a little bit of breathing room, so it doesn't look like I've gotten stopped out quite yet. Uh, do we do have a little bear divs on the 6 minute with less volume on the second push? Yes, we do definitely. 6 minute bear divs, 12-minute bear divs, 5 minute bear divs. We do have some bear divs developing. So it looks like I probably just got stopped out there. Yeah, looks like I just got stopped out, guys, on that short trade. It's all right. My long's still going and lost about 1% there, but I'm already up over 5-6% from yesterday. So not the strongest I've seen through money flow is still looking healthy. Yeah, money flow looks pretty good. And remember, we just looked at the 1 minute chart. Money flow is coming up here. No real bear divs on the 1 minute. So we might continue pushing up a little bit higher locally, but I am starting to now look for short positions. Breaking above that naked daily. Let me turn on that naked daily real quick. And it doesn't look like it's giving us much of a reaction. It was at around 93,750. Not giving us much of a reaction. We got a small little drop from it, but now we're starting to break above it. And let's look at our volume very locally here. Okay, yeah, I do like how volume is starting to decrease, guys. So now we're starting to make bear divs here. Volume is decreasing as we're making new highs. So what we want to wait for now, though, because we've broken above our resistance, we either want to wait until we start to lose this resistance again, or until we break some bearish market structure locally, like on the 1 minute, 5 minute chart, because this thing could just keep grinding up until we actually take out those highs at 94.8 or hit this channel midline here. But the fact that we're starting to see new highs locally, new highs locally on decreasing volume here now is giving us a sign that this is starting to get a little bit exhausted here. Excuse me. Next level, I mean, this 886 here, there's not much else there. We do know that in sideways ranges, the 886 will give us a reaction. I'm not too interested in it. I would have much rather rejected from this resistance here. But now that we're starting to break above it and we're starting to close 15-minute candles above it, it looks like we are going to continue pushing up here. Let's see. And we're seeing just a little bit of a short squeeze happen now. Yeah, we're starting to short squeeze, guys. Those shorts that are getting stopped out, including my own, are starting to short squeeze. So you can see here how open interest has been dropping for the last half an hour, and your CVD is increasing here. So a forced close of a short is a market buy. That's why your CVD is going to be increasing here. But we know that it's not new money. It's not new longs that are stepping in. It's really those short people that were shorting that naked daily point of control and that 786, like myself, are now getting their positions closed out. That's why our open interest is dropping here. Now, this short squeeze could be the end of it. We could spike up a little bit higher. The market makers like to do this sometimes, stop out all those people, and then we could get that dump that occurs. And if we do start to change market structure locally now, like in this little area here, if we break down, we could be looking for a lower high and then short this lower high right up here and still get that trade that plays out, just entering on a second opportunity of it after seeing the market maker fake out. So let's see. We would want to see new shorts coming in. So we'd want to see this coming down. We would want to see this coming up here. We'd want to see some new shorts coming in because this short squeeze could continue. Short squeeze could continue. We're pushing up to the 886. We have some liquidity. This is also going to be kind of a key liquidity grab right up here because of such a sharp move down right afterwards. Let's go ahead and throw. Yeah, and that's going to be aligning with your channel midline as well. So maybe we were looking at a liquidity grab when it was just one level higher because we were looking at this liquidity grab right in here. You did see a pretty aggressive move down after that. Okay, yeah, I love Jason, so I'm super excited to be collabing with him. There's liquidity at 94.2 on the heat map. Okay, let's check that out actually. So let's go look at our last week of price action here. We are starting to grab some of that liquidity that was there. Man, I mean, we've really taken out most of the liquidity. There probably is some small amounts in there, but nothing too big to be looking at. Like a majority of the liquidity is below us. And guys, let me show you on the Model 3 heat map that now we have quite a bit of liquidity down into those lows from 89,200. This is $89,200 lows. So look at, we have a lot of liquidity resting into those lows as well. And then we still have liquidity resting down at 87.5 as well. Right in here, 86,000, where all those lows were. Let's zoom out here. All in here, we have quite a bit of liquidity resting below all these higher lows. And this was from the holiday week. Remember, where not a lot of people were trading. We were just building slightly higher lows on the chart. So if we start to SFP these highs and then fall back inside your volume profile, we could absolutely squeeze all of this pretty quickly. But for now, I'm kind of waiting. These highs are important still. It's internal liquidity, but the much more important liquidity grab is of the range highs from last week or from a couple weeks ago. When was that? Yeah, a couple weeks ago. Last Monday. Not a couple weeks, like a week and a half. But we're still pushing up, and this last push up, these last few hours from today, I mean, a pretty nice push up in volume. Money flow also looks relatively good here on Market Cipher B and on NAMI on the 1 hour chart. Let's go to the 4 hour chart. Yeah, money flow looks pretty healthy here, and it's rising as well. No bear divs yet. Actually, they've pretty much been invalidated here. So local 4 hour bear divs have been invalidated. It looks like we're going to come for the highs, to be honest. We'll keep an eye on some scalp trades. Let me check on Ethereum. How Ethereum's pushing up right into that golden pocket. All right, and then we want to check on total market cap. So this is another thing I do, guys. When Bitcoin is coming up to resistance, the altcoins are coming up to their resistances. Now we can go to the total market cap, and we can check on our total market cap to see if it's also at resistance. Because if total market cap is at resistance with bear divs, and the whatever coin you're looking at is at resistance with bear divs, then you might get that trade that's added confluence to look for a bit of a reversal. I would say we're still going to continue higher on the total market cap because we're breaking above our golden pocket. That golden pocket was really at the value area high of the range. And you can see we did get a small reaction, but we were able to hold the value area high as support. So now that we're holding the value area high as support locally, we're most likely going to come up to take out these highs unless we reject from the 786. So with total market cap looking bullish, money flow actually looks very bullish on the 1 hour on total market cap. It's likely that we are going to continue pushing up here. Okay, Mind Tapestry, welcome in, man. It's going good. Thank you for being here. Okay, do we have 1 hour, 2 hour bear divs? No, we do not have 1 hour or 2 hour bear divs. So if we look here, no bear divs here on the chart. We're making higher highs and even higher highs here. Now, NAMI was printing some local bear divs, but now they've been invalidated with this last push up. And anyways, if you're seeing, even if we were seeing, let me go back to Bitcoin, even if we were seeing bear divs, like let's just say this was bear divs, but the money flow is still coming up aggressively, bullish money flow is always going to overpower a single drive of bear divs, whatever time frame that's on, 15-minute, hourly, 4 hourly, even the daily time frame. If you have very bullish daily money flow and you're starting to develop a single drive of bear divs on the daily, sure, you might get a small pullback, but it's likely the trend continues. The overall trend continues here. So we want to wait till that money flow starts to kind of round off, and then by then you generally will have like a couple drives of bear div. And then you also want to be looking for bear div. You don't want to look for bear div in the middle of nowhere and short where there's no levels. You want to be looking for bear div at your resistance levels. So here's how we do it as a trader. Our resistance that we just had at the beginning of the stream was our 786 and our naked daily point of control with that internal liquidity graph. Well, clearly we're breaking above it with a nice little volume imbalance candle here. So clearly this resistance didn't hold. So now we're not interested in really trading anything between our next resistance areas. And I would even say this 886 is not a good, all we have here is the 886. We don't really have any order blocks in here. Maybe like some very low time frame, 10 or 15-minute order blocks might be somewhere in here. But really, the next key level is that internal liquidity grab into our channel midline. That would be the next thing I'm kind of interested in. And I would have to see the confirmed swing failure pattern there. I would also want to see that total market cap actually touching the 786 Fibonacci just above us. If total market cap's at resistance and Bitcoin is going to reject from that channel midline with that liquidity grab, it might give us at least a scalp short opportunity to bring back down to the VWAP. But until then, we're not looking for trades. We play level to level. We just broke above our resistance. So now we're going to wait for the next resistance. Even if we're seeing bear divs in between these levels, I'm not interested in shorting it if I don't have a level there. You want to see those bear divs confirming once you get to your level of resistance. And that's why I say price action first, indicator second. So you mark out your levels of interest, then you check the indicators. But you only check the indicators once you get to those levels of resistance. Let's see. Seems like there is some sort of resistance at every 1,000. Yeah, yes, there is. So Lost X, between $96,000 and $98,000, there is a lot of work for Bitcoin to get through. You're right. There is almost like some sort of resistance level, and a lot of them are volume levels too, and volume are strong resistance levels. So Bitcoin has got a lot of work to do to really get up to that $100,000 area, or even like 101,000 where our 50-week moving average is. And that's why once we get up into that zone, I am going to be looking for shorts. Dr. Go, let's see. We will get daily bearish divergence if we break that 94.8K. Yeah, good point there. Let me go ahead and zoom out onto the daily. So one of the things that we're looking at, guys, is overall, this entire corrective move. Let me just hide some of this stuff on the chart and clean this up. Overall, this entire corrective ascending channel that we're in, we could come all the way up, reject, and then we would be seeing, at least even locally here, lower highs, higher highs here, and that would give us a nice confirmed bear dip. But we would want to see it confirmed. If we close today this bullish, it will not confirm a bear dip. If anything, this thing's going to start pushing up, about to invalidate the bear divs on the daily time frame. So they're not confirmed yet until we start to roll over a little bit. And this is a really nice bullish candle, a bullish imbalanced daily candle. Look at how big and long this thing is. So if we close up in this area up here, man, I would expect to see some continuation over the next couple days. Also, money flow is just crossing into the green. We just got that green dot on market cipher. If it confirms, I expect us to continue pushing up over the next few days, probably to $96,500, $97,000. Let's see here. Senior Divine Hood. I'm looking at the 2-day AVAX chart. Market Cipher B has me conflicted. Money flow is red, and there's a massive bearish order block according to Lux Algo. Okay, so AVAX, and you're looking at that 2-day chart. Yeah, money flow is red, but here's the thing. So this is why I also like using NAMI. You can see NAMI is quicker on money flow, definitely quicker. You can see that Market Cipher B is starting to bottom out here. It's looking like it wants to round out. We're printing a 2-day green dot here. But on NAMI, you can see the money flow has been in the red for, almost a week now, and it's heavily rising to the upside here. You also bottomed out on your 2-day momentum wave. So it does look pretty nice. The thing is, okay, so what we want to look at for AVAX is you have this small bottoming range in here. Let's see if we can break above the value area high, which we are, and close the daily above the value area high. If we can close the daily candle, see, we are coming up to resistance right now, but we've already tapped that resistance. This resistance was a naked weekly point of control and a daily level. We've already tapped that. So actually this box should be gone now because that was this rejection here. So let me get rid of those. I just haven't looked at AVAX in a week or so. Let's check to see if we do have a new naked daily point of control within this little move down over the past week. I think that AVAX is going to come up. Okay, we're at a naked daily point of control right now on AVAX. It's also going to be right around your 786 Fibonacci. So if we pull a Fibonacci retracement, you can see your 786 naked daily point of control. So this is your resistance right now. Let's go ahead and zoom in on the hourly. And let me mark out that naked daily. There we go. And let's just look at what we're seeing here, because it does look like, at least on the daily time frame, on the higher time frames, even if we get a pullback from here, it looks like we're going to come up to 15.8, 15.8, 15.9. Around that area, because that's our next big resistance into our pitchfork band. And we also have a naked daily point of control and a liquidity grab up there. That liquidity grab would be nice to see. We've got some liquidity running in here. I guess we took out one of those. We took out this high, but these two highs. So liquidity and then this little range liquidity up here. But I think it's likely that if we can close the daily candle above this value area high, yeah, we might see a small pullback here, even an SFP of this high, maybe even to backtest that value area high. But here's the thing. If we SFP this high and then drop to backtest this value area high, I would actually be looking for longs on the bullish backtest of the value area high. I'd be looking for longs. And of course, you would wait for it to turn and you'd put your stop below wherever that local wick is. And I would be looking to target that right up there, 15.6-ish area. So we're at local resistance, 786 naked daily point of control. But just like Bitcoin, it's not really seeing too much of a rejection here yet. Actually, yeah, it looks like, this looks almost bull flaggy in some ways. A bull pennant that's going. We are confirming some bear divs, multiple drives, bear divs here, and then bear divs up to the highs. Money flow is starting to drain out here. But we're not getting a drop. We're not even getting really a local change in market structure. You can see here, if I zoom in onto the 5-minute, you're just getting a triangle that's building in here. Looks actually pretty bullish. Like something like this. And maybe a symmetrical triangle, but it looks kind of bull flaggy in here at that resistance. So just like Bitcoin kind of chopped around for a bit and then it busted through. You can see right in here, that's what this was. Kind of chopped around for a bit and then busted through. We might be seeing something similar on AVAX. It's all going to have to do with what Bitcoin does. If Bitcoin's about to reject from this liquidity grab around 94.4 or 95K even, then the altcoins will probably correct too. We're still not coming up to the 786 on the total market cap. I think we're going to continue higher, guys, because locally today, we broke above the value area high. We flipped it to support. Now it's likely that we at least work our way up to our next big resistance. which would be a 786 Fibonacci, because this could still be a bearish 1, 2, big 3 down. It's looking less likely now, though. All right, let me catch up on this chat. How is one to interpret these shenanigans? Yeah, no, I know what you mean, Dr. Goat. It's been rough lately, especially like this little thing in here, pretty rough. All of this in here was pretty rough. I mean, these are just a bunch of like either running flats but it's been a bit of a mess. Even the last 6 weeks or so, some of that range has been easy to trade, but locally since really Christmas, it's kind of been a mess in here. Oh man, look at this total market cap is really looking nice here. I think we're going to continue up to take out the local highs, guys. Total market cap looks good. Oh, Mark Dutch, welcome in. Just had a look under the hood and everything looks divine to sweep some liquidity. You know, when you look under the hood, that's where that liquidity's at. It's good to see you, Mark Dutch. Thank you so much for being here and welcome in. Yeah, guys, please hit the like button for me. If you guys get any sort of insight into the market from this stream, if you learn anything, please hit the like button for me. Also, I know we're in the middle of looking at the trades here, but really, really quickly, I want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you'll get a minimum of 20% discounts on trading fees. You can actually earn up to 40% discounts on trading fees if you deposit some of the large amounts into the exchange. And you can earn up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. They do offer some of the best initial deposit bonuses in the industry. If you deposit $100, you can get a 50% deposit bonus, which is the highest I've seen of any $100 deposit on any exchange. And then they're offering some great 20% and 10% deposit bonuses, depending on if you deposit some of the larger amounts. And I've also partnered with BYDFI to create a Telegram community. Like yesterday, I told you guys about the scalp long on that internal liquidity grab right here, grabbing that liquidity into the golden pocket right here. So we longed from right here. I took 2 TPs on this already, but you saw that I just got stopped out at that 786. But my stop loss was so tight on this. And even if I leave I have like 10, 15% running, you know, it's such a good risk reward trade. So what I was trying to say by that is I posted about that in the Telegram ahead of time. I let you guys know what I was going to do ahead of time, that I was going to take it, and then I let you guys know when I took it. If you're interested in joining the Telegram community, it's free. All you need to do to get into the Telegram community is sign up with BYDFI using my affiliate link and then deposit $100. That $100 is your money to trade with. You will get the discounts on the trading fees. You can get the 50% bonus if you KYC. And then once you have deposited the $100 into the exchange, there's a Telegram link in the description of this video. Click on that Telegram link, type in /verify in your user ID, which will be right up here, and that'll get you access to the Telegram community. And once you're in, you are in. The next partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator down here that I use for all my confirmations. You guys see me talk about it every single day on the live stream. We're looking at Market Cypher B. We're looking at NAMI to look at the money flow, to look to see if we have confirmations to take a short, like bear divs at resistance. And so it helps me stay out of a lot of bad trades, but it also helps me get into trades that I might not be so confident on if I didn't have this tool. If you want to be good at your profession, you need to have the proper tools for the job. And for me, NAMI is one of those tools. I have partnered with NAMI to give, they've given us, our community, a 50% off discount code. If you do use my affiliate link in the description and you use the discount code DIVINE50, you can get 50% off a lifetime subscription to NAMI. And then lastly, we have Bybit and MEXC, 2 other exchanges I'm partnered with. They're both great exchanges, both offering some rewards if you sign up, discounts on trading fees if you sign up. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering a 10% initial deposit bonus up to $1,000. So those, just a good way to help out the channel, guys, if you use those affiliate links. Of course, not asking you to, just saying if you want to, they're there. It's a way to say thank you. It's a way to help out the channel. But let's get back to the TA here. It looks like Bitcoin is just wanting to push here. Yeah, I mean, locally, no sign of weakness yet. Fresh longs are starting to come in again here. And I would say that we're likely to continue up. We're at that 886 right now, but we're likely to continue up to probably take out at least 94.4. We're more likely to come up to take out the highs into about 95K. But you can see we're right at that 886, which does sometimes reject us in a sideways range. Let me make that yellow. Do we see any sign of weakness here? No bear divs on the 5-minute. Do we have bear divs on the 12-minute? Yes, we do have some bear divs on the 12-minute. Money flow is once again coming up locally on both Market Cipher B and NAMI. And we just printed a hidden bull div signal on NAMI, which is on this low. This is where we rejected from that naked daily point of control. We made a higher low and printed a hidden bull div. To me, this thing is likely to continue to grab that liquidity. Do we have 15-minute bear divs? No. And we did print a hidden bull div on that low again. So it looks like this wants to continue pushing up a little bit here. 1 hour, money flow looks pretty good. We've invalidated the local bear divs on NAMI and no bear divs on Market Cipher B. All indications to me are higher. Could we get a small little pullback to fill this imbalance? Yeah, we could pull back to fill in a little bit of this fair value gap that's been created. You could see in here we kind of have this fair value gap so far. So maybe we could pull back, fill in some of that imbalance locally, and then continue. Actually, it's not even wanting to do that. We're going to pump, baby. Pump time. Let's go. All right. On heat map, how do you know the best model to look at? For me, AXSCB, for me, the most reliable has been the Model 3 heat map. So the Model 3 heat map, to me, it gives you the clearest liquidity pools. Like the Model 1, when you look at the Model 1, it's showing you little scattered pockets of where that liquidity is at. But the Model 3 refines it out a little bit more and lets you know where those bigger pockets are. It's like instead of spreading it out, it lets you know really where the key pockets of liquidity are. So I would, personally for me, I would recommend using the Model 3. And then the Model 2, I do use in time too. It can give you those hard cutoffs for the liquidity. Like on the Model 3, you'll see it's more like clouded edges. It kind of clouds down into a color. But if you want to find out where that like hard stop on the liquidity is, you can come into the Model 2 and you can say, okay, wait, right here at like 91,200. And then that's when you can come in and look for if you have support around that level. Then, but generally Model 2 and Model 3 are the ones that I look at. You can also, on this liquidation heat map, guys, this is free to use, by the way. This is just CoinGlass, coinglass.com. You come up here, you go to liquidations, and you can go to liquidation here, Model 3 heat map. I like to turn it on symbol, actually. So this is the symbol is an aggregation. If you just go to pair, you're looking at Binance right now. You can also go to Bybit. You can look at Bybit. But when you hit symbol, it's going to take all of those major exchanges and it's like an aggregated heat map, right? It's going to take all the major exchanges, push all the liquidity together and show you where it's at. So the symbol is actually better for me because it's showing you all the exchanges aggregated. And then you can just look at different time frames. Like if you're scalping, you can look at, okay, where's the liquidity been at within the last 24 hours? Okay, so maybe if we hit into resistance, we're going to drop to 91K, take liquidity, and then continue. You know, so maybe if we're going to do something like this, liquidity grab at this high, drop to 91K, grab that liquidity, and then we continue. And so that's good to help you for scalp trades or like intraday trades and stuff like that. Wow, I am so... Okay, wait, let me see. I got lost here. David Brumbelow, welcome in, man. That's what she said. Yeah, you're right, Yarborough. Support the channel. Yeah, thank you, Mark, for posting the link to BYDFI for me. I appreciate that. Vibe All Day, welcome in. Yes, thank you for that, man. It has been a beautiful stream. we're pushing up. You know, I just got stopped out live during the stream, but it's okay because I'm long from lower. I've made at least 5 times as much on that scalp long trade than I have on the stop out of the short trade. So, CJ, welcome in as well. What's up with Bitcoin? Yeah, I think we're going to 96K first, maybe 95K. Let's see if we SFP those highs. It looks like we're going to come SFP the highs at 95K, but because we have kind of now flipped the value area high to support and we're pushing up, if we're not going to see an SFP of the highs, then I do think if we're not going to see an SFP and a drop, and we could still see that and then backtest the value area high and continue, but if we don't SFP the highs, it's likely we go straight up to 96.5, 96 to 96.5. And remember, guys, I've been talking about 96.5 being likely before we see a bigger drop, just based off of, let me zoom out again and hide our smaller 8-week long range. And we'll look at this macro range based off of us coming down to the value area low of the range. We wick past it, but we closed the daily candle at it, held it, changed market structure bullishly, held it on another back test. Even though we broke local market structure bearishly here, we did make new highs and overall put in a higher low, another back test, and held it. So 3 tests of the value area low, 3 holds. Now it's likely we work our way up to at least that point of control before, if we do see a bigger rejection, then we're likely to at least locally work our way up to this point of control first. So that's why I'm expecting us overall within this corrective range to at least come up to that area before potentially seeing a bigger dump. And this candle today is very bullish. I know that we did have some CPI news that came out today, guys. CPI month over month, core month over month, and regular month over month, and then year over year CPI. Month over month was lower than expected, or actually, hold on. I know it was bullish CPI. I don't have the readings here for us, but it was a bullish CPI print today, which is good for Bitcoin and crypto. It means the Fed might be more willing to cut. And we're seeing a bit of a push up on this news. Okay, you shouldn't say free. No, so 60 D like 3, it is free because that $100 is still your money to trade with. You're just putting it on the exchange. You know, you could put it on the exchange, join the Telegram, and take it right out if you wanted to. I mean, that wouldn't be cool, but you could do that. The only thing, guys, so I'm partnered with BYDFI. I wanted to make something that is, I'm totally transparent with you guys about everything. So you guys know on my YouTube channel, I've only got 3,000 subscribers, like 3,300. I make like less than $200 a month in ads. The reason I'm doing this YouTube channel is not for the money at all. Not at all for the money. With BYDFI, whatever exchange you join, you are going to have to pay taker and maker fees. You know, you have to pay fees on your trades. No matter what exchange you use, you have to pay fees. So I partnered with BYDFI. The only thing that I get from this, they've helped me open this Telegram community. And of course, they're trying to get some of my subscribers to use their exchange. But they just give me a portion of your guys' trading fees that you would give to the exchange anyways. Whether you're using Bybit, whether you're using BYDFI, Blowfin, whatever, you're going to pay trading fees on whatever exchange you're using. A lot of these traders that trade, or these YouTube promoters that promote a certain exchange, all they're doing is, some of the bigger ones will get paid like an actual, you know, monthly wage from them or something like that. But for me, all that I get from BYDFI is a percentage of your trading fees that you would pay to the exchange anyways. But with that, you guys get discounts on trading fees, like a minimum of 20% discounts on trading fees. You guys can earn bonuses, and you can get up to $8,100 in futures trading bonuses depending on how much you trade in the futures markets. So for me, I truly do see it as a win-win for everyone. And if it wasn't a win for you guys, I wouldn't do it. I've actually had so many different companies reach out to me, and I've declined almost all of them, honestly, almost all of them. Let's see. 95.8 starts my Giga short zone. Yes, 90 Travi Trades, welcome in, by the way. It's really good to see you here. About 96K for me, because that naked weekly point of control is at 95,970. It's on Coinbase at least, but also because our point of control is at 96.6. Let's just say 96.6. So between 96 and 97K for me is kind of where I'm looking. All right. Yeah, pump it up. It looks like we are pumping, guys. It looks like we're going to continue pushing here. Check the 12-hour on the Model 3. Okay, let's go to the Model 3. Let's check that 12-hour. Okay, yes, we are coming up to take out that liquidity. So that liquidity does look like it is pretty much resting up into these highs. Maybe let's zoom back in here. And about, what is that? 94,500, 94,400. That is very interesting because that is where this high is at. So actually most of the liquidity is stopped out in this high, which is right into our channel midline. Now, guys, this channel is still an important channel that we have on the charts. Let me get rid of all this junk. So this channel is based off of the low at 80.5K up to the higher low at 84.4 up to your first high. And for the most part, the midline has been respected. And when the midline is respected in the past, it's more likely to be respected in the future. So yeah, everyone thinks we're going to push right up here, continue up. Could we maybe see some sort of double top or a lower high, kind of like we saw in here? We had our high. We came almost all the way up to take out that high, but made a slightly lower high and then dropped. Could we see something like that on a larger scale happening now? Sure, we could. It's not looking the most probable the way Bitcoin's pumping right now, but like if we just did something like this, of course, dang it, let me get this. And of course, it's far less candles, but you would see, could we see something kind of like that, where you make a lower high and then you dump again? But these channel midlines are no joke. And sometimes you wick past them. Like you'll wick past it a little bit, but close above it. You'll see all these wicks past it. So to come up and take out the actual highs of the range, wick those actual highs, but close the daily candle at or below the midline still might be a possibility here. It's looking bullish though, guys. I mean, I have to say it's looking pretty bullish. Let's go to the 15-minute again. All right, 15 minutes finally starting to develop some possible bear divs here. Higher highs into the midline, lower highs here. Not on NAMI though. And guys, with the way we're pumping right now, I'm not trying to catch a rocket ship. So I'm going to wait for some bearish market structure to form, because we could just do something like this and then, continue pushing up, grab the liquidity of the highs. So for me, until we start to break some sort of market structure bearishly on like the 3-minute, the 5-minute, I am not looking to really take a short here. It's pumping. Don't get in the way. Wait for a sign of weakness. Sol, wait, where did that just go? Sol came above our first bearish pitchfork and then came down and basically bounced on it. I took that long, did the same thing the day before, but didn't catch it. Okay, let's see here on Solana. So let me check. Well, on Solana, looks like right now we're coming up to that pitchfork band again. And this pitchfork band has been a pretty rough resistance. But remember, Job Fuel, we were talking about how Solana didn't invalidate its 5-wave impulse like Bitcoin. 1, 2, 1, 2, a big third wave here. We got our fourth wave that pulled back exactly to the 0.5 Fibonacci. And now 1, 2, 3, 4, 5 in here. So we have a 5. All of this is a 5. And then we could be pulling back in one more 4 before making one more 5. If you have 2 1 2s, you need 2 4 5s. So it makes sense that we could come a little bit higher to grab the liquidity around 147. I talked about this actually in the video yesterday. But the fact that we bounced directly from the 0.5 here and saw a nice bullish reaction, to me tells me that it's more likely that this impulse is still in play. Because also we rejected perfectly from the 1.618, which is your third wave target. So third wave hit the target exactly, rejected. Fourth wave came down to support exactly and bounced. So now we could actually we could pull a Fibonacci expansion and look at our fifth wave targets coming up between the 1.236 and the 1.618. That is actually our target for our 4 5s. And more likely the 618 gets hit. Usually the 618 does get hit more often than the 1.236. Or I mean, obviously you have to hit the 1.236 to get to the 1.618, but more often the fifth wave stops up here. But as far as the bearish pitchfork goes, so let me go ahead and I'm just going to hide some of this stuff to clean up the chart really quickly. Okay, let's do that. Just get rid of some of this stuff for a second. And let's look at that bearish pitchfork. Yeah, so are you talking about this larger pitchfork here? And let me turn off the bullish one. We were rejecting from that midline. Rejection midline, rejection midline, rejection midline, came down, took new lows. But we're forming that range, remember, between the point of control and the value area low. It's a sideways range that's forming. But we were rejecting from the midline, what, 1, 2, 3, actually more than that. Here was 1, here was 2, here was 3, here was 4, here was 5, and now we're finally starting to break through it. So that tells me that if we close the daily candle above this bearish pitchfork midline, we're likely to at least come take out the range highs. Get rid of this. Yeah, and then I would say let's throw some levels on the chart here. Let's see what we have. Naked monthlies, naked weeklies. Man, we might push all the way up into like 160s, the 160s. I just want to check something here on our naked weeklies. Yeah, if we don't SFP this high, we might be pushing up all the way up, what, mid 167, 168. Let's see. And let me make sure that this. So that's a 32% drop. So we're going to put this on log scale. Oh my gosh. Okay. Actually, that 148 looks so good, guys. If we did come up and SFP the range highs into that golden pocket at 148, that would be actually really nice to see on the higher time frames. So we have our kind of left shoulder or our tap 1, our tap 2 here. If we come up here, grab the liquidity from range highs, reject from this golden pocket, and then come down and make another higher low here, flipping market structure overall bullishly. You had an impulse here. So because you had an impulse here, you're going to expect a correction to golden pocket here, a 3-wave corrective move down. That could be your tap 3 of a larger accumulation in here. And then after that, you'd want to see expansion, kind of that big bottom that forms in here. So I am overall kind of bullish on Solana, but I would like to at least get a decent swing short from around this area to bring down to, one of your golden pockets or we would have to see where it's at once that ended. Yeah, naked weekly point of control. And then that would probably be around your golden pocket. If we this is a theoretical golden pocket, guys. Let's just throw that there. And then we'll put that non-log scale. Man, that would be really nice to see if we came down to like this level, and actually that's where your value area low is at 123. So if you SFP the range highs, lose your point of control, it's at 143. You would expect to move down to value area low again, and your value area low happens to be right in here. If I turn on that large range, look at where your value area low is, right on that 786. So this support is looking real nice. Those are larger time frame trades. And of course, that if you shorted this swing failure pattern of this high into your golden pocket, this would probably take, a couple weeks to a month to play out if we're going to downtrend. But it does make sense to see kind of that rounded bottom, whether you want to call it an inverse head and shoulders, a Model 2 Wyckoff accumulation. It does make sense to see a sort of rounded bottom in here. You would be breaking market structure by breaking that high. That's a bullish break in market structure on higher time frames. Then you can make a higher low and take off. So this would be really nice. And that would also be part of a larger one wave. You had a 5-wave impulse up in your one wave, a nice good pullback in a 2-wave, and then your 3 could be the expansion phase of accumulation as far as Elliott wave theory goes. But Solana looking pretty good here. Solana's been pretty bullish lately. Let's turn off the bearish one. We really need to start closing this. If this rejects us again, it's not going to look good. Because remember, I talk about 3 taps on these things a lot. Well, you'll usually see like a bigger tap here. All of this can be considered one tap, but within that one tap, you have your 1, 2. If this is 3, you could fall all the way back down, take out this liquidity, then make another rise up, and then see a 3rd tap. And if you reject that, then you're going to drop. But it would be nice to wick up, grab that liquidity into the golden pocket, and then fall. Okay, 2-hour order block at 93.2. Thought we may leave it behind. Yeah, it looks like. Okay, let's see here. Bitcoin's just coming. Yeah, it's stuck at the midline for a second, guys, right now. At 93.2. So we've already busted through that. Yeah, though we may. Oh, are you talking about for support or for resistance? Probably resistance. Happened at like 1 a.m. So I should have been asleep. Another bearish pitchfork above us around 146.7. Yeah. Okay. So 146.7, right under the 147. And Jaw Field, they often will wick up a little bit past it. So if you wick up past that 146.7, SFP that 147 high, or even come up into that log golden pocket at 148 and then start to lose it. Yeah, it could be awesome. Glasshopper, you said your sign-up bonus expired. Oh, man. Well, maybe I can talk to Alan about that. Or if you're in a Telegram, talk to Alan. He's honestly one of the best reps I've ever worked with. I've worked with a few. Maybe he can do something about that to get that reignited for you. Or reestablished, whatever you say. Is KYC needed to get the bonus? I think so. 5.6, I think it is needed KYC. But it's only level 1 KYC. What are your thoughts on SUI? Well, on SUI, I'm bullish. I'm actually looking for new highs on SUI. SUI, and I talked about this in my video yesterday. We've been talking about this all last week, and I made a short 1-minute video about SUI. I think it was last Friday or Saturday. But from this low, we have a nice, very clear double 1-2 here. Our big 3rd wave here. So now we're looking for some 4 5s, 4 5s. I think SUI overall is going to come up to around 220 to 227 in this general area. And we could see a rejection from here. But as far as our pitchfork trading goes, so let me just get rid of this and we'll go just to the pitchfork here. SUI was holding the lows of the pitchfork, which was also a nice 1-to-1 Fibonacci extinction, trend-based Fibonacci extinction. Held the bottom of the pitchfork. You can see what was acting as resistance. First, we rejected from the top of it. Then we rejected from the bottom of the pitchfork band. We were able to finally bust above it, kind of flip it to support. So now that we're flipping the band to support, what was acting as resistance is now flipping to support. It's likely that you could work your way up to the midline now. Just like this was support here, but then you lost it, and then it became resistance. Same thing. We flipped that from resistance to support. So now it's likely we could continue pushing higher. But on lower term time frames, we didn't quite come down and hit it yet. You can see it's a little bit below us, but we're looking for, in our wave 4, you're looking to bounce between the 382 and the 0.5 Fibonacci of your wave 3. So if we go from the lows of wave 3 to the highs of wave 3, we put on those wave 4 targets. You can see we did hit in that zone between the 382 and the 0.5 Fibonacci. So yes, technically, and I don't know, that must have been on log scale. Let me get rid of that one. So we have met our target for the wave 4, and now we could be about to push up. It's been forming a sideways range. So SUI, if you were trading SUI and in scalp mode, this would be your kind of sideways range you're looking at. And you can see how you have all these equal highs in here. We're starting to break above those highs today. So you want to kind of close your candle above all of these semi-equal highs in here. You could throw it on this high. You'd want to close it above this 184.8, 184.9. And we wicked past it, but we still haven't started closing above it, not even an hourly candle. So this could be a liquidity grab of all those highs before rolling back down, rotating back down here. So just be careful for that. What I would be looking at, well, let's see. 1, 2. I mean, all of this could be part of a third wave. If we're just looking at after you grab the lows of this range, you can see all this liquidity in here. You grab the lows, not this guy, not the overall low, but you did grab these internal lows. And then from there, 1, 2, all of this could be a third wave in here. And then you maybe pull back in a fourth wave to back test those prior highs before continuing up higher. And we could pull our golden pocket. The reason why I'm also kind of bullish on SUI, because look at this move down. 3-wave corrective move down, and now we're starting to range sideways here. So now we could be about to impulse up. But this was a 3-wave corrective move, not a 5-wave move. Because this was 3 waves, it's more corrective. That means eventually you're likely to take out these highs. Now, could we fool around in here for a bit first? Yeah. You could even come up to golden pocket, then come back down. But it's likely overall on more macro time frames, especially with the bullish Ellie's double 1-2 Elliott count on the daily time frame, it's likely that we do break higher. Okay, let's see here. You don't need to justify your statement. Just don't say free. Okay, yeah, I get you. 60 dike. Delick, 60 D-lick, D-like. Meme cat in 1L, the common target of your wave 3 has not been hit. Which on Bitcoin are you talking about, or on SUI? Yes, SUI's common target has not been hit. Actually, let's see here. If we do that. Well, I'm not sure if you're talking about SUI, but SUI's actually hit way past it. We did have an initial reaction at that target, pulled back, flipped the pitchfork band to support, broke above it, flipped it to support, and continued higher. So sometimes the 1.618 is a common target, but you don't have to end there. Sometimes you'll bust all the way up to the 2.618, or I seen Dogecoin bust up to the 7-1. We were in an impulse, and it was during like the Saturday Night Live crap. It busted all the way up to the 7-1 retrace on that, or 7-1, 7 times higher. What was I looking for? The 3. Yeah, so we rejected from the 3-1. So what that means is that this move up, down, this move up was 3 times longer than this move up, pretty much. Rejected from the 3-1 target on SUI. Okay. Which is at 94,500. At 94,500, we have the channel midline and an internal liquidity grab. But we're breaking above it right now, guys. We're not really seeing stoppage. And like I said, it's more likely we come for the actual highs. Even to wick above the to wick the highs out and to close the daily candle at or below the pitchfork, or the channel midline, you might see something like that. Like we saw on the daily time frame. You can see some wicks past it a little bit, but you'll close at or above. We might wick past it to grab that liquidity, but close at or below. Or I would even be looking at the 4-hour chart. The 4-hour chart's good to look at. See how we can wick past it a little bit, but close above it? Wick past it a bit, but close at it. Uh, 60 D-like, thank you, man. I believe you're honestly an awesome person and deserve more than you get back. Thank you for that, dude. I appreciate that comment so much. Yeah, long-term, Alex, 2001 M. I agree with you. Longer term, I do think we need to go to 80K still and take out those lows. First of all, those lows at 80K, it was not at a very significant support level. You know, there was not significant support there. But also, even if we're looking at, because we were initially looking at, let me turn off some of these levels. We were initially looking at a double 1-2 impulse, a wave 1, wave 2, internal wave 1, internal wave 2, rejecting from the bearish backtest of that anchored VWAP and dropping in a wave 3. So we were looking at the bearish backtest of our Fibonacci channel, which is right here, being our wave 4, and then we wanted to see a wave 5, and then another 4, and then another 5 to come down to take out our 74K lows. And this would be your wave C of a much bigger flat correction of pretty much all of our 2025 price action. Now this corrective move could be a longer 3-wave corrective move to come up here before dropping. But even if we're going to see a larger WXY correction, and I know that Coons is now looking at this as a 3-wave corrective move here, and then he's looking for a possible 3-wave corrective move up to about, 101K or so. And that does make sense. That's where our 50-week moving average is up in that, located in around that area. Maybe to the top of the channel up here. And then now seeing another 3-wave corrective move down to take out the lows of 80.5K, potentially at 78, potentially at 74. And seeing all of this is a WXY. And so that is a possibility. And this X wave could come all the way up to the golden pocket. And if it does, the golden pocket is resting at 108 on the log scale, 107, 108. So if we do the non-log golden pocket, you can see it's actually right at your value area high at 110,000, 108 to 110,000. But we do have to be careful because we are using the log chart. And if you see more than a 30% drop, and Coons will agree with this, if you see more than a 30% drop in the chart, this was a 36% drop in the chart, you need to take this Fibonacci, you need to go into your settings, and you need to make sure you click based off log scale. That'll give you your proper 61% retracement, 61.8% retracement as far as mathematics go. That is going to give you 106 to 108, really, $1,000. And we have very key liquidity resting into that area as well from this big push down. So that is definitely, and a lot of people would be looking to come up to hit value area high. What if we just reject, we front run value area high, reject from this, take this liquidity, and then drop right back down? But until we can get back inside of our Fibonacci channel, and I'll throw that on the chart in just a second here. Until we can get back inside of our Fibonacci channel, I am not going to, I'm thinking that we're going to reject under 100K. So let me throw on that Fibonacci channel, and I'll show you guys why this Fibonacci channel is so important. It was pretty much our entire bull market trend. And I'll zoom out to the 2-day time frame here. And on the 2-day time frame, I pulled this channel literally way the heck back in here from the bear market lows. So these are the 3 pivots I pulled the channel. Bear market lows to your higher low you created after breaking market structure bullishly on the weekly time frame, and then to your first major high in that break, right? So 1, 2, 3, 4, 5. That's your first impulse on higher time frames on the weekly time frame. Flat correction in here, and then wave 3. But from this channel that was pulled, you can see how nicely it's been respected on the entire move. Hit the top of the channel. This was also our golden pocket. $12,000 drop to the midline. Bounce from the midline, came up to the 1.618. That was your all-time high in 2024. back tested the channel, saw a bounce, but it made a lower high. We lost the channel, back tested it, came down to the 618. Back tested again, couldn't, fell to the midline. Midline held, kind of a 3-tap thing here at the midline. Push up, you break above your channel for the now again, but you formed a distribution range here. Now you distribute back inside your channel. You bounce from the 618, you bearishly backtest the channel. Now that you're back inside of it, you reject, you make new lows, you hit the midline. Chop around, flip the 618 to support, you lose it, you resistance for a couple days, for about a week. Bust above, you come up, reject the top, reject the top, reject the top. You lose the midline and start closing weekly candles. You can see we had wicks, but not really any major candle closes the entire bull market. But once you start losing that 6-1 or that anchored VWAP, that's when you see the full breakdown. You broke down past the channel, and just this last 6 to 8 weeks, what has been happening? Now I'll zoom in here. Just the last 6 to 8 weeks, you can see we lost that Fibonacci channel. And what did we do? After losing it, you'll bounce from support, bearish backtest rejection, bearish backtest rejection, bearish backtest rejection. So could we now come all the way up and backtest it again for a larger time frame rejection before coming down? Yes, we could. Absolutely. But we're forming what looks like a corrective range. And if you go watch my videos from 6 to 8 weeks ago, I kept drawing this little square, this kind of rising tilted square like this, saying we could form a range like this that happens for a couple months. And now it's a couple months later, and we're still kind of in this corrective range. So after you lose a major trend structure, this has been our trend for the entire bull market, you could see a corrective range form underneath it before truly seeing a bigger dump to the downside, truly rejecting and seeing a bigger dump. And if we turn on that 50-week moving average, in the next couple of weeks or so, if we come up to this area, your 50-week moving average, your anchored VWAP, your back test of the channel there, and you reject, because remember, the last time we rejected from this 50-week moving average after losing it, anytime in a bull market, you lose that 50-week moving average. Let me just zoom out to the weekly real quick. And we look at our last bull market, bounce, hold it as support, make new highs. But once you lose that 50-week moving average, you lose it, back test, and once you reject on the back test, that's when you see a big drop. So now for the first time, let me just now hide this. Let's grab our bars pattern. We could be seeing something very, very similar where we lose it. We kind of grind up to it, right? Let me shrink this up a little bit to match our structure. But look, it could be a very, very similar price structure where you kind of come up to test it and then you drop. And we could extend this a little bit. Something like that, where you're going to see a back test of it and then drop. And that would be that corrective range where everyone's getting hyper bullish in here. Oh my God, we're going to new all-time highs. We're going to new all-time highs. Boom. And also, if we look at that 50-week chart, when's the last time we saw a weekly green dot? Gave us something very similar. So we printed a weekly green dot a few weeks ago in the middle of December, so almost a month ago. The last time we saw a big fat green dot like that on Market Cipher B gave us, 5, 6, 7 weeks of upside, overall making that kind of corrective square, ascending channel type of range before ultimately breaking down and making new lows. So could we be seeing something very similar to that? Corrective range and then break down to make new lows, right? So we could also be looking at that. The markets never repeat, but they do rhyme. And look at that. You could be seeing something like that. Break down, bounce up to back test it, reject, and then you finally come down and take out your lows. we're just crossing into the red on money flow on the weekly. And yes, the green dot should give you a few weeks of a move to the upside. What do you think suggests? I still do think we can go back. So I kind of just explained that, CJ, but I think we're likely locally, especially with today's price action, to come up to maybe 96 and a half, 97. But I do, or even, up to 101 ish, 101.5, 101, 102, actually, probably in between, these. But I do think that overall, we still are going to reject and make new lows. It's just, are we going to see this little weekly green dot kind of push us up a little bit higher first before seeing that drop down? 96,444 marked. Okay, awesome. The 8-hour looked really bullish to me a few hours ago, still does. I've been loading up on the pullbacks, gotten along yesterday afternoon on the pullback. Yeah, I got in along too, David. Yesterday on that internal swing failure pattern. I talked about this in the Telegram yesterday, guys, but I was looking at, because we had front run, so we had a couple golden pockets we were looking at. We were looking at this golden pocket here, and yesterday we had front run that golden pocket on this low here. We had a 3-wave corrective move up, and then we had one last push down, but an overall larger 3-wave corrective move down. So I said, if we SFP this low into that golden pocket, I'm going to long. So I'm long from in here. But yeah, you could load. I mean, like when you bounced from the VWAP here, started reclaiming it, you could have looked to re-add maybe. I don't like, because to me, this was a scalp trade. And I don't really necessarily like to add so close on scalp trades, but nice, man. If you're loading up on the pullbacks, just make sure you're trailing that stop loss, moving that stop loss up. We're starting to see a small rejection from that channel midline, guys. What's happening here? Mother effer. Give me just a second, guys. All right. Yeah, we're seeing a pretty nice fresh shorts coming in right at that midline. So look at we're starting to drop in the last 15 minutes, 10 15 minutes, short positions, and they're new short positions that are coming in that are dropping us. I mean, that was our internal SFP level that we were looking at. I still think we're going to come a little bit higher here. It would be nice to anyways come a little bit higher to take out the liquidity, the actual highs before dropping. Okay, and marked over. Yeah, that marked over 40 days ago. Nice, man. That's really awesome. I had Solana marked for 155. Okay, 155. Let me check Solana here. Well, okay, I do like 155 might be the top of the pitchfork band. Yeah, it's going to be right around the top of the pitchfork band because by the time we get up there, it is going to be the top. So you can see the bottom of the pitchfork band is giving us some resistance here. But if we're going to break above that and not SFP or maybe even SFP and hold it, then yeah, we're probably going to work our way up to the top, which is going to be right around 155 before seeing potential. But we might just reject from here to come down to the bottom to kind of back test your prior highs in here and then continue. Honestly, I think we're going to get another pullback on Solana just based off the higher time frame accumulation that's happening. You normally won't see, kind of a tap one, tap two, and then you're going to just blast off here. You'll generally see that accumulation form, that rounded bottom that forms in here. Your accumulation range, this is accumulation. The whales are buying when they get towards the fair value or the value area low of the range. They're buying up, buying up, buying up, accumulation, accumulation, and then you have your big expansion. I guess we did see that here, huh? Low, another low, and then you just took off. Not quite as accumulation as this, though. This looks more like a established range rather than that. I want to check out Bitcoin dominance real quick. Wow, dominance is pumping. Okay. Dominance did come down to our support. So, guys, this is so awesome. Like, we talked about this now. I didn't have a box here, but remember last Friday on the live stream, we talked about this. We rejected from the naked weekly point of control and value area high. We were expecting a move down because we'd lost the point of control last Friday. So we were expecting a move down to the 786 value area low. So we got a bounce from the 786 in the value area low. And now if we close today's daily candle above the POC, you might see a pullback from the golden pocket, back test that POC, and then we might continue this up. And Bitcoin dominance could continue to rise. I mean, you could say 1, 2, 3, 4, 5 in some sort of contracting diagonal. Maybe a 3-wave move down here, and then we're going to get another 5-wave impulse up here, making it an overall A, B, C correction ending on a lower high before dropping. That's kind of what we want to see for alt season. Okay, if you're correct, we'll come down to 84K, then bounce. Well, 84K is very interesting liquidity. And 84.4, this was at 84.4. Did I change that line? That's the one I'm looking for. I mean, that's a very key low. And if we do break this ascending channel down, when you have a channel structure and you break it down, you'll often sweep the liquidity of at least the second pivot of the channel. So it does make sense if we're going to reject here and lose the channel, then we're going to come down and sweep at least the second pivot. Sometimes you sweep all the liquidity. And usually that's on lower time frame channels. And they tend to be more aggressive, like steep channels. If you're rising, you break it down, you'll usually sweep all of it. Let's see. Is Sui pumping right now? Sui's up 4.5% on the day. Be careful with this, guys. Sui just SFP'd the range highs, or all these semi-equal highs in here. And even I would say that the key high was this high. You finally just took out that high of the range, right? Lower high, lower high, lower high, but they're all the liquidity is probably resting above that high. Because if you short it in here, you're going to put your stop above that high. If you short it in here, you're probably putting your stop above that high. If you short it in here, you're putting your stop above that high. So we just came up, grabbed the liquidity of that range high. Let's see if we now come down and finally grab this because it was front run. And we still didn't quite hit the 0.5 Fibonacci yet, which is at 170. And we still didn't quite hit the back test of the pitchfork band yet. Busted above it. Maybe we're going to come down and back test it and actually hit it before going up. You are above the value area high, and very locally, you're trying to flip it to support. Break above it. If we can hold this, then yeah, we'll continue pushing up. We'll probably push up at least to that golden pocket. There is a naked daily just above us. I would say, yeah, the golden pocket area looks pretty nice, though. Look at your money flow on the daily, about to cross into the green. NAMI, green dot, money flow rising here. So, yeah, I think that even if we see a small pullback from this range liquidity grab, range high liquidity grab, we're most likely going to make a higher low and continue up. Little maybe 5-wave impulse in here. I don't like the way that looks, though. So you could say this is hard to count, first of all, as a 5-wave impulse. 1, 2, it looks like a big 3 there. You didn't 4, you didn't take out those highs, or did you? Yeah, you did. And then 3-wave corrective move. 1, 2, 3, 4, 5. Pull back. This could be your wave 5. So I guess you on low time frames, and you shouldn't really be counting on the LA waves under 15 minutes. But this could be an impulse that's completed here, and you could pull back to the golden pocket. Pulled from the low of the impulse to the high of the impulse. So yeah, that golden pocket area around the POC. Bet you there's a naked daily point of control around there. Yeah, right there. That's today's, actually. So that's actually nice support. If we don't hold the value area high, we're probably going to drop down here. That could be a good long position. So maybe now this naked daily is not confirmed yet, but it's highly likely to confirm. It's not probably not like we're going to drop down there today. So I just marked it out, and then we could set an alert there. So GP long that. You'd want to see bull divs coming down to there, though, guys. We might not even make it down there. We might just hold this and continue pushing. Okay, my plan is to enter short the moment Bitcoin gets overbought on the daily time frame. That is exactly what caused the rejection in a similar structure last cycle. Are you looking at the RSI for that, Lost X? Sui, I believe, topped. I had 191 to the next high. Then we nuke. 191 is the next high, and then we nuke. So that 191 is a golden pocket. Yeah, and this could still be part of, like, so let me zoom out here onto the 4-hour. What we're looking at is that double 1-2 impulse. At least I am. And so 1-2, 1-2, a big 3. Now your fourth wave generally lasts as long or longer than your second wave. Well, if we look at time-wise, this took, what was that? 5.5 days, almost 6 days. And this initial pullback was only, what, 2 days? Yeah, 2 days. So you could be seeing a larger up to golden pocket and then come down, take out those lows into 170, into actually hitting your channel or your pitchfork band before seeing now the 1, 2, 3, 4, 5, and then another 3 wave, and then a 1, 2, 3, 4, 5. Seeing the 2 1 2s, and then you could see the 4 5s, and oftentimes those 4s are longer than your 2s. So yes, you could still get a pullback from that golden pocket. Okay, guys, I do have to leave in 10 minutes. I have kind of a hard cutoff today. So let me check the chat really quickly here, see if you guys want me to look at anything in particular. The probabilities that we move to all-time high from lower. The probabilities that this move from all-time high to lower is that it's a motive. Yes, Meme Cat, I agree with you. I agree that that's a motive wave down from the all-time high to 80.5K and that we're in a corrective range before continuing lower. Did you see rates turned so bullish last 1.5 hours? I didn't look at the funding rates yet, but they're bullish funding rates. Okay. Ian talking about the move that started Monday. Us open. You can count double 1 2s. So the move that started on Monday. Yeah, you could be looking at a double 1 2 from Monday's low. From this area here. I mean, let's see. Did we hit the golden pocket? You would have to almost count that. More likely to me, it would be a wave. Oh, oops. It would be a 1, a 2, and then all of this is your 3. Maybe take the liquidity, pull back 4, and then a 5 in here. But yeah, you could count it 1, 2, 1, 2, and then this is part of the third. I think it looks a little bit better if you count all of this as part of the third. Actually, you know what would be nice is if we do this 1, 2, reject from the midline right now, 3, a small pullback, and then we get our 5th wave to take out that liquidity, and then you could see a 3 wave move down to your golden pocket, and that'd probably be where your value area high is, around 91.5. Let's just do a little thought experiment here. Yeah, you would be right into that golden pocket, and your value area high is going to be right around there. If we turn on that value area high, you can see very close. Okay, this is playing out like Ron Paul's infamous banana zone. Everyone thinks crypto is dead too. Retail anyways. When I look, retail is still bullish on crypto. Where everyone on the littlest moves up, they're still calling for new all-time highs. Caesar Coco, thank you so much, dude. Appreciate you so much, man. Sol is unbelievably respectful of these levels. I was curious where you draw your pitchforks on which time frames and which pitchfork to choose and why. So Caesar, that's a really complicated question, but you in pitchforks, you're looking at a trend, right? So I'll show you let's zoom out to the daily time frame. And we're looking at 2 trends on this. So this pitchfork's a really old pitchfork pulled from way at the bottom of our impulsive price action. You can see way down here, but this was our first big break in market structure, lower high. Actually, it wasn't a break on the higher time frames, but on the lower time frames, this was impulsive. So we had impulsive structure. We made a higher low. And so you're taking those major pivots, the swing low to the swing high up to the higher low. And then you pull that pitchfork. And this pitchfork was really respected. We broke out of it. Once we fell back inside of it, rejection, rejection, rejection. And we're kind of working our way to the bottom. But let's say, for instance, I'll show you a different pitchfork. Let's say, for instance, like the bearish pitchfork, right? Because since the all-time high, we've made a lower high and we could make a lower low now. We've been kind of in bearish market structure for the past 6 months or so, 5-6 months. And so now that we've changed our trend bearishly on the high time frames, let's just say this 2-day time frame, this major low was broken to the downside. So bearish break in market structure. Now, because we broke market structure bearishly by taking out that low, you could expect a lower high before creating another lower low. So now that we know there's a possible bearish shift to a bearish trend of lower lows and lower highs, we're going to want to pull a bearish pitchfork. So we look at both possibilities. We look at the bullish structure. We look at the bearish structure. So now we know our key high is this high. We know our key low is this low because that was the bearish break in market structure. And then our key lower high is this high. So now we can pull a pitchfork. You're going to start your first pivot on the high. Second pivot's going to go down to the low. Third pivot's going to go to that lower high. And now, if we were looking at like an aggressive drop, you would want to use an original pitchfork, right? Because it's a very steep trend. You're looking at the key zones within a trend. But we don't want to quite look at it yet because we're still within our larger range. We're still within a larger sideways range. So you're going to change this pitchfork. You're going to come into the settings here, and you're going to change it. Now, first, you're going to look at the skiff pitchfork, right? And this is what I've had on the chart because we're in a sideways range. So you want that trend to kind of be a sideways trend, sideways and down. So now we're going to look at the sideways and down trend, and there's a possibility we could work our way to the bottom, grab the liquidity, and then we could see maybe a shift here, right? And now once you have your pitchfork on the chart, you want to see how nice it's respected. So I'm going to come in on the 12-hour chart, and the more it's respected in the past, the more it's likely to be respected in the future, right? So now you can see here, we have the pitchfork pulled of our key pivots, and it looks to be pretty well respected, kind of form that range in between the band like you often do. Even though that this was before the actual pivot, it's based off human psychology, so it still will be respected. I can show you guys that on the Fibonacci channel on Bitcoin. But you bounce from the bottom, after rejecting the top, you bounce from the upper band, you made a lower high, you fell through it, you back tested the top, you rejected, so now you fall. You fall to the midline. You get a nice bounce from the midline, lower high, and then you lose the midline. And that's where we're at right now. Back testing, rejected all here, so you're going to make a new low. You did. You took out your lows. Now, after taking out your lows, you're going to make another attempt at it. The other day, we made an attempt, and we were starting to reject. I said, this could get real bad if we lose local support, but we didn't. And now we're breaking through it, so that's nice. If we close the daily candle today above this midline, then it's likely that we could, if we don't SFP the range highs, of course, then we could continue in a nice, pretty big move up here. And remember, around like the 167, 168, we have some resistance up there. But also, we have to break this golden pocket here. All right, let's see here. Bull market has just started. Christy Hark, I don't know if I agree with that. So with all due respect there, I hope it did. I hope it just did. I hope we're in a super cycle where it just started. But if we zoom out to the weekly time frame, since 2022, we've been in a bull market. Bullish market structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And yes, this could continue, but on the weekly time frame, multiple drives of weekly bearish divergence, money flow draining out of the asset as now about to cross over into the red. Anytime we've seen triple drive of bear divs on the weekly, it has been the end of the bull market. Even this here, bear divs on the weekly, money flow draining out, bear market, right? If we go on the monthly time frame, you can see here the last time we saw monthly bear divs, money flow starting to drain out, bear market, right? And we do have monthly bear divs here. 2024 high, 2025 at the beginning, up to the most recent all-time high. We do have bear divs here. Now, even more locally within the beginning of the year, February of 2025, to our new all-time high made in October, bear divs here on the monthly, bear divs on the monthly. So these higher time frame bearish divergences always signal some sort of pullback. Even if the pullback is just going to come down to 70K, hit that golden pocket at 70K, and then push right back up. I'm not necessarily calling bear market, but I don't think it's the beginning of the bull market. I think we're closer to the end of the bull market, unless we're going to see some sort of super cycle. But I've been looking at this structure, right? So let me zoom out to the 2-day time frame. And guys, I got to go right after this. I'm very sorry about that. 5-wave impulse to the upside in a bull market. We broke market structure bearishly here. So now we could say maybe this impulse is done, right? This 5-wave impulse is done. We got our first multi-month correction to the downside here. Now we came up in a B wave, hit our flat target zone between the 1.236 and the 1.382, rejecting perfectly from our multi-cycle pitchfork midline. Now we want to see a motive wave or an impulse wave to the downside in a wave C, and your target is to take out your A wave lows. So are we going to come down and take out those A wave lows and then see a whole nother bullish cycle start? Yeah, that's possible. That would be kind of the super cycle theory. The other possibility is that, we're close to the end and you could see a major drop on Bitcoin. Let's see, where was that? You could see a major drop on Bitcoin all the way into the 50s. This is our multi-cycle channel, kind of pulled from your 2 all-time highs and down to your bear market lows. You can see we flipped the midline, worked our way up to the top, kind of rejecting the top, tried to get above it. You saw a failed auction above it. That distribution range that happened up here above it, you distributed back into your channel. So now are we just going to see a back test of the channel and then a bigger drop here, potentially all the way down to that midline? I would just say we're more likely close to the end than the beginning, but I hope I'm wrong there. I genuinely do. Could give us another SFP if we hit 95,300 then fall. Yeah, I'm looking for that 95K SFP, guys. But be aware, you guys want to see, make sure you see some sort of bearish confirmation, a sign of weakness. Because right now we're not seeing any signs of weakness here. Okay, what indicators do you use? The bottom. This is called NAMI trading. And there's a link for this in the description. NAMI trading, if you guys use the discount code Divine50, you can get 50% off. It is a paid indicator, but it's very, very helpful for me. So I got you guys a 50% off at least. Anyways, guys, I do got to get going. Thank you all so much. I might stream tomorrow, depending on how long the collab takes with Jason. But tune in. I'll probably let you guys know in the Telegram. I'll be live on Thursday, 2 p.m. Eastern Standard Time. Love y'all so much. Stay tuned in the Telegram. If I do take another scalp short or, add to the long or new trades, I'll let you guys know.